Oh, look at that. Just ruined the surprise. Good morning, guys. Welcome back. We have your favorite guest here today for the showdown, FxBigDog. We're going to go ahead and battle today, trading 5 pairs. We're each going to have 2 pairs that we're going to trade to see who can close first. You guys know the deal, so get ready. We're going to start right after this. Welcome back. How you doing, FxBigDog?
I am doing good, Cameron. How are you doing, buddy?
Doing great. I see everyone in the chat. Good morning to John, Derek Arturo, Buenos Dias, Arturo, Francis. Good morning, Brian. We got William in here, JR, Alberto from Colombia. Good morning. Good morning. Good to see everyone in the chat ready to watch us trade live today. So, are you ready?
Bon dias. Bon dias. Bon dias. Oh, that's good, Cameron. I'm pretty
Buenos
impressed.
Dias. I did Spanish class. Okay.
Oh, okay. I gotcha. All right. Well, listen here. Let's go ahead and get the show started. Hey, thank you, Cameron, for bringing me back onto the show again. It is really good to go ahead and share a little bit about the markets and to talk about the sort of the environment that we trade in, because this market environment changes so many times, and we're currently in a different type of market environment than we were last year. In fact, I want to go ahead and share with everyone exactly how the market has changed and how we have to make sure that we adjust accordingly. So back in 2022, we were running our trade ideas, and we're doing pretty well. We're leading a 17 to 20, or let's say 15 to 25% a month. We were rocking and rolling the nation, and we managed to stay aggressive in the sort of trading approach. But this year in 2022, we seem to be seeing the markets moving very quickly in a direction and then holding. And then it's very slow to react on the retracement. So we're definitely in a different type of market environment that we have to get through. So I want to go ahead and say to those traders, if you find yourself a little frustrated with the market because you're getting these bursts of the market breaking out and then slowing down, and when you get in, it suddenly retraces against you. If you're finding that's happening a lot, then don't be too concerned, because this is just a short-term sort of condition that we're in right now. We're definitely going to move out of that, and we're going to start seeing a little bit of better training conditions, or at least some more trading conditions that are going to be best suited for our strategies. So just stick around. Things will change pretty soon as we head into the summer trading. Now, I know we're at the very start of that, so let's go ahead and jump into some trade opportunities this week. Now, Cameron, we've been doing very well with regards to the trades that we've actually done on the live show. We've closed out all our positions, so we've flat on all our positions. So remember this, traders. If you've come into this show every week, we have closed out in profit. So all the trades that we give to you this week, whether you follow it or not, and remember something, a small disclaimer, all right? This show is all about educational purposes. Sure, you can benefit for those that want to follow the signals and have been following the signals and actually, or at least should I say, traded ideas. For those that have been following the trade ideas have been pretty successful so far, because we've been successful. And if you do what we do, then of course you're successful. So I have to go ahead and once again remind everyone that this is for educational purposes only. All right. We're not telling you that you got to do what we're doing. We're just showing you what we're doing. And if you follow, that's up to you. You hold the responsibility with regards to that. So, all right. I want to make sure that's clear, because the way the world's going today, it seems like the responsibility is never on you. It's always on someone else. And so I'm just making sure that you understand that if you do follow us, the responsibility is on you and not on us. All right. So let's go ahead and take a look and see what's going on, Cam. We're going to go ahead and start off. Let's go ahead and just throw in. You know what? What I want to do is I want to go ahead and actually start something different today. I want to look at the. It's just after 9:30. I want to look at the Dow Jones, and I want to go ahead and show some traders some sort of changes here. So let me go ahead and share my screen, and let's go ahead and bring in my screen right here. And let's take a look and see what we have here with regards to trade opportunities. So quickly, as we go into the Dow this morning, we'll take a look over here. I'm just going to refresh. We notice that the Dow has jumped above the previous open. Now, traders at around about 9:35 creates an opportunity, and the opportunity is this. I want to go ahead and teach someone something here. If you notice that the Dow Jones opens up above the previous close, and when it does that, it normally comes back to fill up the close. So what we're looking for right here, when the Dow is positive on the day, we look at this as a risk-on approach, right? We look at a risk-on environment. But we have to realize that if the Dow opens up higher, and it tends to want to go down and fill the gap, which means that we're expecting the Dow to actually go bearish, even if it is for a few hours. That is a risk off. What does risk off mean? Risk off means that there are safe haven currency pairs. The euro, the JPY, the Swiss franc, the US dollar, they all will be seen a little bit of more in an upside move, stronger move, because of this downside move in the Dow. So if money's flowing out of the stock market, it's flowing into cash. And therefore, if we talk about risk off, we're talking about investors moving out into a more secure investment, and normally we'd start seeing the currencies, the safe haven currencies, start gaining in value. And so if that's the case, then this is what it looks like right here. Let me see if I've got something here. Yeah, here we go. Then it looks like something like this, right? Where we're looking at a risk on, but of course that will be if the Dow's up. But when the Dow's going down, we're looking at a risk off. Now, risk off would mean that US dollar will rally, Euro rally, JPY rally, Swiss rally. So if you look at the way you trade it, is you would be buying US dollar CAD right here, buy US dollar CAD. You'll be buying US dollar, you'll be selling New Zealand dollar, all right? So the New Zealand dollar against the dollar. You would be selling the Aussie against the US dollar right here. So let's go take a look and see here. So if we're looking at stronger dollar, and where is my, oh, here we go. If we're looking at stronger dollar, then let's go take a look at this right here. And we're going to go to US dollar CAD right here. So US dollar CAD, if I'm looking at US dollar CAD at the moment right now on the 1 hour time frame, I know that it's gone bearish right here. But if you take a look over here, notice that we also see negative, or see in this case positive divergence, right? We've seen positive divergence here as price pushes lower, but the momentum pushes higher. So with that being said, Cameron, my sort of trade today would be, let's pick up a US dollar CAD position, and I'm going to take that as my first trade position right here, and I'm going to go ahead and say, let's buy US dollar CAD, and it should be chasing after the highs up here at the top, and that would give us about a 40 pip rally. All we're looking for is 20 pips. So I'm going to go with a buy on US dollar CAD. Now, traders, if you're following, all right, or at least want to follow what we're doing, make sure you go ahead and check out the description down below. There is a Telegram link. And in that Telegram link, that is where we're going to be posting these trades. So all these trades that you're seeing right now, you will get these trades sent to you via a Telegram. I'm going to go ahead and do this. And let's see. I don't know if that's going to work out here. Let's see here. No, that's not going to work out. Thought I was trying something smart, but I guess I didn't. I'm not so smart. All right. So okay, so that's going to be sent to the Telegram channel, right? And so the Telegram channel will be posting those trades. So check it out. Cameron, did we get in on that trade?
Yes.
All right, there we go. I've just got a message here from the Telegram channel here telling me that I bought US dollar CAD at an opening price of 32.04. So 32.04, pretty much where price is at right now, is where we got in, and we're looking for a 20 pip grab from that setup. All right, done. All right, now that's taking a look at dollar, looking at the Dow right here and establishing what the Dow is looking at for today. So I'm expecting the Dow to fall a little bit more, even though it has dipped quite a bit so far since the top. Dip a little bit more. In that case, then Cameron, let's go to another currency pair. So, which currency pair are you going to go ahead and choose today?
Um, I can do the euro. Now the euros. I'm expecting a little bit of a bullish run here on the euro before I see a dip.
All right. Well, let's go. You do your analysis here. Go ahead and do what exactly how you. And I'm going to bring it back to our risk on risk off, and then I'm going to go ahead and just go ahead and talk about what it looks like.
Yeah, I always like to see these diversions set up like this. That shows me when I see some consolidation right here with some negative divergence. I'm expecting a big push before I see a huge dip, and we have a nice supply level right above price right now, and that's what I'm expecting. Price to just kind of push towards there before we see some dippage. My members like that word dippage there, but yeah, I'm expecting a nice push before we see a dip. Um, and we have about 50 pips now. Maybe price doesn't push all the way. Sometimes it likes to push just under that supply and then want to dip back down. But I'm expecting at least 20 pips of a pusher, especially seeing this negative divergence forming on my oscillator, um, and seeing this consolidation of this low on my MACD. I'm expecting a nice bullish, at least more than 20 pips.
Okay. All right. So Cameron's going to go ahead and execute a trade right now on this position, and he's going to be looking at a sell. Once again, traders, he's going to go ahead
I'm
and
looking for a
sell.
buy on the euro.
Oh, my bad. You're going to look for a buy. My bad. Of course, yeah. So Cameron's buying. So the risk off environment that we're anticipating. Now, keeping in mind that the stock market opened up positive on the day, and so Cameron's trading that sort of momentum, and the momentum's positive. So if the stock market is positive, then that means it is a risk on, right? Risk on would mean that the euro would be selling off and the dollar would be selling off. So both of them. So which means that there's not going to be a lot of momentum in this right here. Both these currency pairs are both considered as safe haven currency pairs. And so both of them are going to be fighting over control. So it comes back down to what is stronger. Is it the euro stronger or is the US dollar stronger? Or if they're both weak, which one's weaker? Is the euro weaker than the dollar, or is the dollar weaker than the euro? And that'll define what the direction is going to be on that particular pair. Okay. So let's go to let's go. So Cameron's gone ahead and bought euro US dollar, expecting continuation of the weakness out in the dollar and maybe a little strength, even though it's still weak, but a little strength out of the euro. Now, remember, we have had the Eurozone this week raise their rates 25 basis point. So it's the euro is still coming off this excitement of this rate hike, and money's flowing back into euro, and this is why we've seen some stronger euro. But I do believe that the divergence that we're seeing, that Cameron mentioned, that we will start seeing. Now, like Cameron mentioned, it might not happen straight away. It might go rally first before it goes in hidden dips. But I'm going to suspect that at any time, we could start seeing the euro against the dollar fall short. Cameron's continue will continue to trade that momentum. But again, if it does sink, Cameron, I want you to explain to the students what happens if you're wrong and price goes down. Explain to them what your plan of action is there.
So my plan of action is if price does decide to dip before we close out at 20 pips, then what we do is we dollar cost average in the market. So every 25 pips against us, we go ahead and get in additional positions, and we'll go ahead and manage those positions accordingly to how many we get in. and usually we have a game plan of how we want to target as we expect when price comes back up. But as we dollar cost average, our break even will go ahead and fall shorter, and it's easier for us to close out as price goes and moves back up.
Okay, so it's moving back towards retesting that sort of breakout point to the downside. So,
Yeah.
so quickly, with that being said, where is your downside support if the market does go south? Where are you looking at the price to move down to?
Well, first thing is I have a trend line right here. Okay. So
Yep.
pricing come anything around this level here to test support of this trend line. We also can look for some retest levels. Like we have some here as well, some consolidation. There's some consolidation right here, there's some consolidation here. There's some retests here, some retests. So price can maybe fall, maybe just break through the support, test this level right here. If we get a really strong bearish move, but if anything, we could see price want to maybe move, test this support here. There's even some consolidation here as well.
Okay. All right.
There's many levels that we don't know where price can go to, but we can always anticipate there's price is going to move for some liquidity. So we're looking for oil blocks, some candle wicks where we see that consolidation for price to go ahead and grab some liquidity when we see such a strong movement like that.
Okay, cool. So I'm going to go ahead and continue with this risk on, risk off approach, right? And so if we take a look at my risk off approach, now once again, I'm expecting Dow Jones to go ahead and sell off a little bit in today's trading. We've had quite a bit of sell off already, but the markets haven't reacted yet. So let's go take a look and see if we can pick up something else right here. So here is the next one would be let's see here, a Swiss CAD Swiss. So if I'm looking to do a CAD Swiss trade, then I would be expecting the Canadian dollar to sell off against the Swiss, which means that the Swiss would be bullish at the moment right now, but I'm expecting a stronger Swiss, and that'll create a CAD Swiss sell-off. Now, that might just be a short-term move. The question is, do I want to trade against a short-term move specifically with this currency pair? Because this currency pair can be extremely slow at moving. So let me take a look over here. CAD Swiss. All right. So the CAD Swiss is actually moving bullish here. And I'll be honest with you, this is the one time I don't want to go ahead and trade this divergence. Not divergence, but this risk off. I'm going to rather prefer to trade in this direction of this push that we're seeing right now. So I'm going to go ahead and say I'm taking the opposite side of the risk off, and I'm going to say that just like Cameron, I'm going to go ahead and opt in for more of the momentum trade on the CAD Swiss. So with that being said, I'm going to go with a buy on CAD Swiss. Cameron, let's go ahead and throw CAD Swiss buy on that.
Okay.
So traders, I'm trading the momentum because I see this pair inside a consolidation. We've come back down to retest of close to the support level right here. So I'm expecting the market to go back up and take out that high. That high is trading at around about, let's go ahead and throw a number in there. It is at 84. We're trading at 65. That's a 20-pip rally. And here we go, traders. I'm looking at my Telegram posting, and it is at 67.68. So we got in at 68 based on spread. So we're in on the US, the CAD Swiss with a 67.68 move. Now, it is okay if you find that the markets are maybe not trendy as much and more in a sort of a consolidated status. Then you could actually do very similar to what Cameron and I did. And that sometimes could be pretty much hedging your positions, right? Where you buy one, like as an example, let me go ahead and pull up a white screen here. So Cameron went ahead and he bought US dollar, Euro USD, right? Cameron went ahead and bought that. Now, if Cameron's buying US dollar and I am selling, so he's buying, and I am also buying, I am also buying US dollar CAD, right? So if I'm buying US dollar CAD and Cameron's buying Euro US dollar, then Cameron's expecting that the US dollar is going to weaken, where I'm expecting the US dollar to actually strengthen. So this is where the hedge lies, right? So what could happen is the euro could rally and Cameron could make his money, and I could see the US dollar CAD actually dip in. And what's happening is I'm adding in new positions. But then when the euro pays out, we're going to see a correction move, and that would mean that the US dollar CAD would see a correction move, and that way I would go ahead and pay out on the US dollar CAD next after I've paid out on the euro US dollar. So it does play as a hedge, and you've probably heard a lot about that stock market where they straddle the market, right? Where they put in some puts on a position to be able to offset their longs on another stock. So you can actually do that with futures. You can sorry, options where you're buying and you're selling to offset your risks on the buy, all right? And that is a put call straddle that is being taken in an option trade. So, and this is no different to that, except you're doing it on two different currency pairs. Okay. Now, let's go ahead and take a look at what else we've got going here. So we've done that. We've done a buy in on the CAD Swiss. We've got a sell. A buy on the euro US dollar. This is Cameron. And then we've got a trade on the US dollar CAD. This one right here. All right, cool. So we're going to buy there. We'll see how this plays out in the course of today. Next up is, let's go take a look. What else we got here? Aussie cross, the Aussie and New Zealand crosses. All right. So, Cam, what are you going to take? Aussie or New Zealand?
I will take either one. New Zealand, it's fine with me.
Oh, all right. Take New Zealand CAD then. Go for it.
Okay. So yeah, they're moving bearish right now. As you can tell, if I go the 50-minute time frame here, we can see price broke through some support here. Testing this low right here. Uh, Not fully showing any positive divergence yet, but we are getting some bearish moves. So we go back to the 1 hour here, and we look for maybe a key level of support that prices want to move into. We see that there is some consolidation here as well. Excuse me. And we could see price want to dip a little further down here on the 1 hour. 20 pips would be just in this consolidation range, which we can anticipate price moving into. I'm been pretty bullish here on the New Zealand CAD, but it looks like we're getting some strong correction right now. Price is not in the oversold in the 4 hours, so I think we got some room here to trade this correction move here. I think we should see price dip a little further down. It could definitely want to play its role in this consolidation. This range bound of support and resistance here, where we see some consolidation. It looks like price wants to take out this low and continue to just dip a little bit more. And even looking at the Aussie CAD, because I do like to look at both pairs when I do trade these pairs, is I also see. Same thing here, a lot more bearish room. If I go the 1 hour, we can see price is still kind of testing, hasn't broken this low yet. That kind of shows me we could see maybe more of an upside on Aussie CAD unless we see price continue to break.
We got another unexpected guest here. He's should we go long or short? Must we go long? He
What's
says
up, big
yes.
man?
He says we should. Okay, no, short it is. Short it is. All right.
All right.
So
So yeah, going back to New Zealand CAD. I gotta say, it almost makes me want to buy because we're sitting at this low here, testing this, and this is a very key level. This low right, there's a key low right here because of my MACD, showing a very high range of bearish move here. So that's a very key level there that I expect price to maybe retest. How many pips do we have to the upside here?
we have approximately.
So about 20 pips just right there of this candle wick. That's very interesting.
Yeah,
Hmm.
I like that. Big dog. Is that the future FX pup?
Um, I think we should expect more bearish move. I think we should see price come and test more key level of support.
Mhm.
I think I'm going to go ahead and sell just because we can just see a little bit of this trend line here. I didn't draw a straight line, but you can see what I'm seeing here. We see a little bit of this trend line of support here. The price is kind of working its way, breaking through this trend line. So it's looking for a key level of support to grab some liquidity at. So I think we should see a little more bearish move before we see the reversal continuing on that bullish trend. So I think I'm going to go sell actually here.
Woo, risky. No, I think you're good. I think you're good. I think sell is on the way.
I think it's just a short-term sell. I'm
Sure.
long-term here. I'm pretty bullish on the New Zealand CAD, as I've talked in my live session. So the members know.
Yeah, definitely. But after that big dip that we've seen right here, and I'm going to show my charts right here for a minute. All right, let's go ahead. All right, so here we go. So this is what I'm seeing right here, and I agree with Cameron being bullish because we're in this uptrend right here. And so this is a rally. The market tested this previous high right here. It's bounced off that. We're in a corrective move. But again, if it's corrected, that means a long-term rally would be probably the way to go. So, yeah, I agree with you, Cam. So, perfect. So you're trading that corrective move, and I'm going to do the same thing here on the Aussie CAD. I'm expecting a corrective move in the Aussie CAD as well. So, therefore, I'm going to look for a setup here on the 5-minute. And if I'm looking at the Aussie CAD, let's just take a look and see what that looks like here on the risk on, risk off. So risk off, Aussie weakness, and Aussie weakness, CAD weakness. I guess we're on the same page. So let's take a look over here. This is the 5-minute. And the 5-minute showing me let's see here. Wave 1. Then we've got an inside structure here. Let's see here, right about there. Oh. We got price. Snap. All right, that's a 5-minute. Let me see if I swing this over to a 15. And let's see here on. Yeah, I think the momentum is down, Cameron. We are trading at this level right here. That I could see a bounce off that, but I think any sort of bounce would be another way to get in again. And then I think the market's on its way down towards this low. I've already identified that low as the target at 89.95 right here. So yeah, I'm going to go ahead and say bearish on the Aussie CAD as well. So go ahead and count me in, Cam. Bearish on the Aussie CAD.
All right, there's a sell on the Aussie CAD.
All right, cool. All right, there we go, traders. If you go ahead and take a look at the trade ideas coming through on the Telegram channel, and it's all free. There we go. Aussie, I got in at 90.64 on a sell, and Cameron got in on a sell on the the New Zealand CAD at 82.06. So, traders, the reason why we share this information with you is because we want to show transparency. We don't want to have any hidden agenda here. We want to show you, hey, this is how we analyze the market. This is how we break it down. And this is how we get into it and how we manage our position. So everyone knows exactly how we do this. Now, I want to go ahead and say that this video, the Friday sessions, is hosted. Well, not hosted. It's hosted by the Traders Network Club. But it is also sponsored. We have a sponsor, and our sponsor is ACAP. If anyone's looking for a broker and looking for, and I'm talking to the international clients, not US-based people, looking for a brokerage company, take a look at our website. We have a bunch of brokers that we do partner with. But this video has been sponsored by ACAP. Cameron, let's go ahead and run an ad on ACAP, give some more information on ACAP. They're based in Australia. Go ahead and check this out. All right, every broker we work with, we have a very close relationship with them, and the reason why we build up those relationships is because we know, even though we know that the broker's out there to make money, we also understand that having a good relationship with a broker helps us to to better assist and to better manage our clients that do go through those brokerage companies. So make sure to check out the links that we have for both two companies we work with, two brokerage companies. Check them out, and we thank ACAP for the sponsorship of this video. We appreciate that, so we can get this video out to as many people as possible. So, with that being said, Cameron, let's go ahead and do another trade. I know I've got a couple of minutes left before I have to hit the road, but let's go take a look at another trade setup. So we've looked at everything right now with regards to the 5 trades that we follow, but let's look at something completely different, and that is, of course, gold. For those that are interested in gold, we've actually been doing some trading on gold and doing pretty well. Here is our results so far. We haven't launched anything on gold, but we're probably going to go be sending out something to our client base that has been following us. So gold has been doing pretty good. We got 8% last month. This month is around about 9%. And so currently, right now, let's take a look at what gold's doing. Gold is currently sitting at this level right here. And as you can see right here, we're really range bound. So it's really easy to be able to trade gold. All we got to do is buy support, sell resistance while it's in this range. And we're expecting gold to actually, in fact, go further down south. So once the market goes ahead and breaks out of this consolidation that it's trading in right now, we're going to see gold drop down even further. We've got 1900 as a short-term target, but we definitely have 1800 as a long-term target based on what I have here on the daily. If you take a look at the daily right here, we're expecting gold to fall back down to this level. Now, there is a couple of things that are starting to show up. Firstly, number one, we notice that the sentiment is indicating that gold's up bullish, right? But I'm not buying into that quite yet. All right, maybe some short-term rally. We are currently holding on actually 2 longs on the gold right now. So we're actually buying gold, and we're looking for short-term profits on that. We've had a bunch of trades that paid out this morning alone, so we're looking pretty good out this morning. In fact, let's take a look over here and take a look at today's trading. Today's trading, we managed to close out just less than 1% today, so we're up 3.6% for the week. So it's been a good week of trading, despite the market have been pretty whippy-lashy because of the rate decision out of Europe, rate decision out of the US right here. So with all of that going on, we've still managed to make a good return. So traders, my thing is, diversify your risk. Make sure that you diversify your risk in gold, in currencies, in Bitcoin, in when at some point in time it's going to start rallying. But put money in, diversify your risk, right? Spread your risk around into different assets that you can go ahead and make sure that if one asset is not doing as well, there's another asset that can be doing well. So make sure that you do that. Now, if you guys are interested in getting involved with Traders Network Club, Cameron, why don't you go ahead and share with them how they can get involved? Maybe share their website, show them where they get how to be able to get the information that they need on the website. All right.
Yeah.
All right.
All you gotta do is go.
Oh, I just muted you for a minute there. Sorry. My
Oh,
bad.
okay. All right, no worries. Yeah, you go to our website, TradersNetworkClub.com, and you go to pricing right here. So under pricing, you'll see our 3 memberships. You want to learn more about our trade ideas here in the professional membership, go ahead and click read more. It'll take you to this page right here where you'll get all our information on all our trade ideas right here. As you can see, the VIP automation, this is getting access to the live sessions I do Monday through Thursday with the VIP members. This is for the VIP members only, so you have to become a VIP member to get access to the VIP automation. We got the Pip Hunter Trio, the Level Up Trio, the Flagship, the Hedge. All the information is right in front of you when you go to this page. So go ahead and check out this page. They're under pricing, read more in the professional membership to get all the information of our trade ideas.
Now, I want to go ahead and mention something about the trio, right? So let's go back here. The trio, for those that don't know, the trio is doing exceptionally well, but it is a different type of approach. It is a martingale type of approach. Now, I'm going to suggest that if you're going to be trading, if you're going to be using the trio level up, the trio level up is the one that's got the martingale, and it's doing very well, and it's good for trading accounts that are small. But also, more importantly, you gotta have a broker that's giving you higher leverage. Now, in the right there where Cameron showed you, you'll notice that we showed two different brokers. The one broker is offering a 500 to 1 leveraging, which is important. So if you want to open up an account, let's say if you want to be aggressive, I would suggest that a $3,000 trading account will probably be ideal with a 500 leveraging, and you'll be able to get really high returns. Well, okay, I guess I have to put a disclaimer out there. All right. I'm not telling you that you will get high returns. I'm just saying that we have been getting high returns with a $3,000 trading account, and also at a $3,000 trading account, we're trading at the moment right now with a 500 to 1 leveraging. So it allows us to have a lot more margin available in order to be able to trade that strategy. So just make sure that you're aware of that. Also, I'm trading it with a 50 to 1 leverage. And with a 50 to 1 leverage, I noticed that that because it's so aggressive, I have to make sure that I check my margins. But if you trade with a 500 to 1, you're not going to really have margin issues. And you're going to be able to get a very good sort of margin levels, even though we have been aggressive on that account. All right. Now, with that being said, traders, I want to go ahead and say that is the wrap for me. Cameron, thank you for allowing me to come in today and joining you in this pursuit of happiness in the Forex market. And we'll go ahead and take a look and see how things playing out with our trades. If you want to follow our trades, once again, go ahead and check out the Telegram channel. You can follow the trades that we've gone ahead and implement. As soon as we close out, you'll know about that. If we add any new positions, you will know about that as well. So check it out. Hope you guys have a fantastic weekend. Cameron, you want to go ahead and do the close? And you muted? You muted?
Thank you for letting me know. Yes, enjoy the rest of your weekend. VIP members, I'll see you guys back for Monday. We got a lot to talk about, especially with the Euro and our game plan on where we want to go ahead and target. So we got a lot to talk about Monday. So I'll see you guys Monday, VIP members.
All right,
That being
excellent.
said, okay, with that being said, you guys enjoy the rest of your weekend. Take care.